if you look at the Nikkei 225 in terms of the Japanese yen price of gold, it's actually gone down about 83% since 1989. So yeah, that's why it's puzzling, because we think in terms of currencies that are becoming worth less and less. So companies become worth more, and that's why I think it's puzzling for a lot of people.
This is the Freeman Report on today's News Talk Radio, TNT.
Right, as I said before the break, my next guest, music to my ears. We're going to talk all about the economy, about what's going on. There's so many questions that I've got that I'm scratching my head about at the moment. So I'm absolutely delighted to welcome Mario Aneko to the Freeman Report. Hello, Mario.
Hi, James. Nice to be here, and thank you for having me.
Yeah, thank you for coming on the show. I wonder if the best place to start is for you to introduce yourself. I know you've got a lot of experience in the City of London, but there's probably lots about that I don't know. So yeah, if you wouldn't mind just introducing yourself, and I guess kind of explaining to our viewers why you're qualified to talk about all the things we're going to talk about today.
Well, my degree at university was international relations with an emphasis in economics. I worked for 20 years in the City of London as a government bond market broker. And while I was in the city, I started looking into gold and silver on a personal basis, and I learned a lot on my own about the monetary system, because the majority of people that work in the city, we trade, and we try to do the best for our firms and our clients, and we try to make as much money as possible, but we don't really ask too much about the nature of money. And I've been studying that for the last, 22 years. And that's why I think I'm qualified to talk about it. I've been running a YouTube channel as well, Maneko64, since late 2015, and I have almost 100,000 subscribers. And so it looks like people from all walks of life, sorry, are interested in what I have to say.
Fantastic. I mean, let's start at the basics then. How would you describe, I mean, I know this is a big question, but if you had to kind of explain to somebody in a couple of minutes what money is, how would you explain it?
Well, we have to go back and do like regression theorem analysis, which the Austrian School of Economics looks into. So you go back in time and to not prehistoric, but pretty ancient times, and people used to barter goods for goods, and they found that sometimes, I wanted something, but someone else didn't have what I wanted, and vice versa. Eventually, people realized that there were some goods or commodities that everyone wanted, and those became the most marketable commodities. And basically, that's what money is. And through history, has been many different things. It could have been salt, that hence the word salary, could have been conches, could have been stones. There's some Polynesian islands in the Pacific that used to use stones as money. In the West, it's been gold and silver for the last few thousand years. And aside from being something that helps you transact indirectly, indirect exchange, it's also supposed to be something that holds its value through time, because if you are able to save some of that money, you want it to be able to hold value. The other thing that money does, it facilitates payment, of course, but it also acts as a unit of account. So basically, that's what money is. Very simple. But the bankers, the politicians, even the universities, they don't seem to want to look at money like that, mainly because it's become so complicated. And that's how they get away with inflating the currency, rising prices. They blame, everybody but the system. So yeah, money is very simple.
Yeah, and of course, obviously, fiat money is essentially debt. And I think there's a lot of people in the West, in the UK, kids are not taught about what money is. And people talk about, well, why can't we just pay off the national debt? Well, if you paid off all the debt, there would be no money, because that's exactly what money is now. It's been taken off the gold standard, which was done many decades ago. Mario, the one thing that I'm scratching my head with right now is I'm looking at the markets across the US and the UK, and there's just so much contradiction. On the one hand, we seem to be in a recession at the moment, I would suggest, when the latest figures come out. And that's being driven by the fact that consumers have got no money because they're being squeezed by high taxes, certainly in the UK here. But also, obviously, we've seen rising prices through inflation. We know some of the US banks are in trouble and a lot of firms are struggling. But on the other hand, we've got a lot of asset classes which seem to be at all-time highs. The stock market keeps on going up regardless, which just seems, when we look at past behavior, like in 2008, the early 2000s, it just seems to contradict everything. We've also got the crypto markets. Bitcoin is setting new all-time highs every day at the moment. How do how should I make sense of this, Mario? What's going on?
Yeah, it's puzzling. I think it's because if you look at the US, the Federal Reserve has supposedly tightened, but the federal government, the Congress, is still spending like a drunken sailor. I think the deficit is, or the budget, no, the national debt, excuse me, is rising by $1 trillion every 100 days. So fiscal policy is still really loose. Same here in the UK, fiscal policy is still really loose, even though, yeah, we have high taxation. And the thing about it is that the GDP numbers as well, I would argue they're even like not real, because they include government spending into the GDP. So if you took out all the government spending, the private economy is doing even worse. But this liquidity from the fiscal policy is driving the markets, in my opinion. And it shows that the Federal Reserve, the Bank of England, the ECB, they actually haven't raised rates enough to really stop all this liquidity. But the problem is, if they raise it even more, there's so much debt in the system that the cost of servicing that for the government, for corporations, for individuals is going to go up. And what that will do, it's going to drive prices even higher, because companies and other actors are going to have to raise prices to cover the debt service. And I would say that in the stock market, it's just a small group of tech companies that is driving everything. And the other thing that's, the Magnificent Seven and crypto as well, I think is a very dangerous place to be. It is very speculative. But yeah, I think if you look, let's say back some years ago at Venezuela and Zimbabwe, their respective stock markets, Caracas and Harare, they were having great years. Their indices were going up like there's no tomorrow, but their currencies were being debased. So it also is part of that, the debasement of the currency. We've seen the Japanese Nikkei 225 reach a new all-time high, and it just matched the high it had back in 1989. But if you look at the Nikkei 225 in terms of the Japanese yen price of gold, it's actually gone down about 83% since 1989. So yeah, that's why it's puzzling, because we think in terms of currencies that are becoming worth less and less. So companies become worth more, and that's why I think it's puzzling for a lot of people. But I think a lot of these elevated values are, they're not real, and there will be some kind of correction. I'm not saying there will be, a huge crash, but I still think the stock market is overvalued.
Yeah, you've just described there exactly what I see, and very, very well put, by the way. I think you described that excellently. I guess the next question that I'm kind of scratching my head about then is Jerome Powell, last week, the director of the Federal Reserve, has indicated that, I mean, those of us who follow the markets have known for a long time that at some point this year, the Fed was going to pivot from raising rates to holding them and then dropping them. He indicated last week that the US is nearly ready to start dropping rates, and no doubt the Bank of England will follow. My question, therefore, is surely if what you've just described is real, which I believe it is, that is the situation, then surely that's going to make things worse, isn't it? Because this money that is suddenly going to be a flow around, isn't that just going to inflate these bubbles, these asset bubbles, even more?
That's right. And the problem with the fiat currency system, as you put it before, is that it's a debt-based system. So in order to keep the system going, you need to issue you need to issue debt forever, because when you issue 100 pounds of debt, you haven't issued the interest you're supposed to pay on that debt. So it's like a snowball, and they've tried to slow it down the last 2.5, 3 years with the rate hikes and the QT on the balance sheet. But if they try to rein it in a bit more, they could very well crash the whole house of cards. So they've got no choice but to like start. First they raised, then they've stopped. Now, they'll probably start cutting. And for those of us who watch these things, in the alternative, who know the nature of the system, it's mad, but it's not surprising, because they're damned if they don't, and they're damned if they do. So all this will mean is that the currencies are going to become worth less and less in terms of real things, and the cost of living is not going to improve. I mean, the other day I went to put some petrol in my car, and I went in to pay, and I got a meal deal, a sandwich, a bag of crisps, and a drink. And I remember those being £3. And the guy said, "Oh, that's £6." I was like, "Really?" So, get ready for the £10 meal deal in a couple of years.
Yeah, absolutely. I mean, look, there's obviously I think people like myself, I mean, I follow the financial markets, I follow gold markets, I follow crypto. I think there's a lot of people quite excited this year about this prospect because, I mean, yeah, it's a dangerous game to be in, because at some point the chairs are going to change and we will see a correction. But there's a lot of people hoping they're going to make a lot of money. Now, pulling out from all of this, Mario, we've obviously got the geopolitical impacts going on at the moment. We've got the BRICS countries, and we've got the de-dollarization going on at the moment, particularly with BRICS countries that are starting to trade in currencies other than the dollar. How does that? I mean, what we've just described is already quite worrying in terms of what we could see this year. But when you add that to the mix, yeah, explain that for us. What could we see happen this year?
Well, we'll go back to 1944 when they created the Bretton Woods system. And at the time, the US and the UK were the two major powers, but the US was taking over. They created the monetary system where all the major currencies were attached or fixed to the dollar, and the dollar was redeemable in gold. That was until 1971. So that's the dollar system. After 71, it became the petrodollar, which basically meant that Saudi Arabia would sell all its oil in dollars. And what that did, as a lot of countries don't produce oil and everyone needs oil, they had to accumulate dollars. And that gave the dollar, that artificially increased demand for dollars. And, when you have demand for something, be it money or anything, its value will stay elevated. And the way it's going to impact not just Americans, but the British, the Europeans, is that our currencies are related to the dollar. But when countries like the BRICS want to deal in their own currencies and pay for oil in their own currencies, It will mean that there will be less demand for dollars, less demand for pounds, less demand for euros. And a lot of these countries, they have been since the 70s accumulating a lot of dollars, pounds, or euros. And what they do with this money is they buy government bonds to keep it, in their reserves. But if they're not going to buy the government bonds, what that's going to do is there's going to be less demand for bonds. Yields are going to go higher. Interest rates are going to be higher than they normally would. So, and a lot of this money that they don't need anymore, the pounds, the dollars, the euros, that's going to flow back into our countries. And, that's going to increase the supply. You increase the supply of the currency, and you don't increase the amount of economic output, then you have prices rising. And that's the consequence of all the inflation of the currency. And
yeah, and exactly. And this is what I'm trying to get to this conversation is that, if America is going to pivot, stop dropping rates, the danger obviously is that the inflation which has come down just yo-yos back up again. And then if we've got the de-dollarization going on, which is going to quicken pace, presumably over the next few years, we've got a real risk here of the dollar collapsing, essentially. I mean, do you think, because, when we see this in the past and we see these problems, such fundamental problems with economies, quite often the way out of that is war. And of course, that's the other thing that's here in the background. I mean, do you think that these things are all converging and that's the direction we're going in?
well, yes, war is always a way out of your fiscal problems. And that happened during World War I, World War II, and it could happen again, even though, we keep hearing of rumors of war and stuff like that. And I think we're already at war, with the Russians, even though it's not official, the way, we're supporting Ukraine. So yeah, it's a way to justify the inflation of the system, and it always hurts the common man. The war and the fiscal spending.
Mario, sadly, we have run out of time, but listen, I'm going to clip the conversation we just had, because I think it explains things very, very well and very clearly to a lot of the lay people who don't necessarily understand all the intricacies of this. Thank you so much, Mario Eneko. I'd love to have you back on the show at some point. Like I said, very eloquently explained the current situation that we're in the West. Right, okay, that's the end of today's show, but we'll be back again to do it all again tomorrow, right here on TNT.